My name is Paul Long, trusted business lender for the South Sound, located in Tacoma, Washington.
And I'm Greg Martin, the Entrepreneur's Banker in Bryan College Station, Texas.
And we are two bankers at home, and we are working together to educate small business in America by sharing with you how we see it. In this episode, we're going to talk about bank underwriting and how COVID-19 has kind of affected some of that. Now, unlike other videos, I need to give a disclaimer. Every bank is different. That's why there's so many different banks out there, so keep that in mind, okay? Now, all businesses are probably affected by COVID-19 in some way. I would say that, there are some that maybe have positive from it, but majority of it is negative. And it's times like this that business owners and investors need to know how banks think, especially in these times. Now, I only say this, I don't usually go into this very honestly, but this is really the God honest truth. And let me give you one sentence that's going to pay many dividends. Banks lend money to people when they need it the least. So, and I'll get into more of information on why I believe that, and you'll see. But really, why is that? Believe it or not, banks are not in the money business. They're in the risk business. We want to make money. We want to make our interest income and our fee income. We do not want your business. We do not want your commercial real estate or whatever collateral you give us. And in times like this, we may ask for a little bit more collateral, or we may look for a little bit more of money down on a purchase because things are weird. When things are going great, hey, it's an easy number and we can get to it. So let's say, for example, if you want a line of credit right now, well, it could be a challenge. If your business has stopped or dramatically slowed down, it depends. It depends. This is also actually where SBA provides a lot of good benefits as well for something like that. Another thing to look at is commercial real estate. Think about the last few months. Many of us have been working from home. So think about, case in point. So it leaves people thinking, do I need an office? It's making your boss and your boss's boss and all these other types of things try to figure out, do I really need to occupy that much space? So it is going to be interesting to see what's going to happen in the future when it comes to commercial real estate. So if you're a landlord of commercial buildings or retail buildings or anything like that, you never know what the future is going to entail. Rental properties and multifamily properties, which are over 4 units, banks use what's called debt service coverage ratio. Yes, I know that's just banking terminology, and I'll briefly describe it to you. So say you have a rental property and a tenant pays you $2,000 a month. You have taxes, maintenance, all that stuff is say $800 a month. So you actually make $1,200 a month on that property. Awesome, sounds good. Now you have a loan payment of $750 a month. Well, banks are going to look at this and want to make sure that you can afford the payment. So you divide how much you're getting net divided by the debt payment, and you get a ratio. And banks want to know that you can afford your payment at least 1.25 times. That 0.25 times is just to make sure that you're making money on it. If it's just 1-to-1, why do you have it? Now with COVID-19, some people are unable to pay rent. So what do you think that does to that number? So again, we do get a little bit of worry about that. So make sure you have money for a rainy day. And so Greg, what are some other things to look at?
Well, a couple things to tie into that, the real estate portion of it is that every good entrepreneur that I work with that is in the rental space, they're doing one thing. They're actually going to, if you're a B2B, like say you're in a strip mall or something like that, they're being proactive. They're talking to their tenants, but they're actually going and trying to gauge who is it that tenant serves. So like if you're a salon or something like that, which was shut down completely, well, that's a forward-looking indicator that business may be struggling. And just because they have a lease payment of $2,000 a month doesn't mean that they can pay it. So how do you have that cushion? And so if you're in that situation, or if you're in any business, COVID and the restrictions and the shelter in place just restricted the cash flow of a lot of businesses. Business don't stop. I mean, a lot of businesses keep going. You know, they had, you know, the point of the PPP was to help with the payroll of the businesses. They had to continue to keep their insurance up. They probably had, if they had like inventory, they had terms with their suppliers that they had bills that they needed to pay. They had to pay utilities. They had to pay rent. They had to do a lot of these things. And if you have a reduction in income, either from the rental or from actual operations, how are you going to make that up? So one of the things that banks, and talking with you, talking with a lot of our other bank friends, is that banks place a premium now more than ever on liquidity. And this is not only cash. You know, they say cash is king and cash flow is queen, but cash is king. Yep. And you do that because you can do so much with cash. And so you need to have cash. If you don't have cash, if you don't have access to stocks or bonds or something that can be readily converted to cash, then do you have the ability to access that through a line of credit? And well, is there availability on your line of credit? Just because you have a $700,000 line of credit, if you have $650,000 already taken out of it, then friend, what you have is a $50,000 line of credit. So do you have availability on that line of credit? Can you draw that? Can you access that? And it's one of those things that when I've been talking with a lot of my clients, whether they've been asking for a loan or not, we go through their expenses and they say, okay, give me best case scenario, reality, and worst case scenario. So one client called it scorched earth, you know, and he's like, I could shut this sucker down. And normally he spends, you know, when you look at last year, when you look at his operations, he was spending about $180,000 a month in expenses. He's like, Greg, I can go scorched earth down to 35,000. And that basically covers his loan payment, his insurance, his tax allocation, and then just some basic utilities and stuff like that. And so if I've got I'm just using simple math because I don't have my calculator today. So if you have $350,000 and you go scorched earth and it's $35,000 a month, you've got 10 months worth of runway. Now, as an entrepreneur, you know, that probably means you're not paying yourself. So hint, 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 you need to have not only liquidity in your business, you need to apply these same principles to you personally so that you can be flexible and you don't have to tap it out. Another thing that we talk about is as businesses are going and they're working, what is your working capital cycle? I know that we talk a lot about this with clients and actually knowing what it is. And that is the time that it takes for you to get an order, to buy materials, to pay your people, to ship out the order, to invoice it, to wait 30 days to get paid from a client, to take the check and to actually put it in your bank and end in cash. That big old cycle, because it's all, again, what do we say? Cash is king, cash flow is queen. And so you've got to know your AP and your accounts receivable, your accounts payable. You need to be aware of, oh my gosh, do I have one client that is 50% of what is owed to me?
That's critical.
Then you better like have an office in that client's business, because you're right next to that payables person saying, hey, I love you. I want to, you know, how's Susie doing today? You know, I want to be best friends, because all things being equal, I want you to pay me. I don't want you to pay jackleg, you know, my competition that you also use, you pay me. So you have to understand customer concentration. You have to understand different industry risks. Again, I briefly mentioned, you know, salons or hair care, stuff like that. I don't have that problem, but to be completely shut down, you have to know what industry and what industry the people that you work with are. Mm-hmm. And so as you're kind of going through that, and as you're talking with your banker, and again, the point of this discussion is how banks look at entrepreneurs when they are going to be lending money. They're going to ask you for projections. They're going to ask you to understand, where are you break even today? Are you below break even? Are you above break even? You know, what's the cushion there? What's your timeline? I mean, quite frankly, Paul, a lot of my clients, I don't know how it is up where you are, but a lot of my clients are being honest and being like, Greg, I'm kind of at break even, maybe a little bit above, maybe a little bit below. Thank goodness we've got the PPP, so that provides some of that liquidity. But realistically, Greg, it's going to be December or January for me to have any degree of confidence of kind of what's going on. So this is going to be a slow, steady.
Yeah.
A lot of people are saying it's going to be a bounce back, and we're going to, move on down the road, no problem. That's not the case. The confidence just isn't there. Yeah. So how do you make sure and how do you track that out? So your banker's going to ask, and again, you don't tell your banker this for the banker's purpose. You do this so that you can track your business and you understand that.
You got to know the numbers. If you ever watch Shark Tank, and
Right.
Most people don't know their numbers, they get crucified, and that's why.
That's right.
Yep. So thank you very much for watching. To learn more about other topics that Greg and I discussed, check out our website. Mine is www.paultlong.com, and Greg's is theentrepreneursbanker.com. Thanks for watching, and see you on a future episode. See ya.
See ya.